We're live.
I believe we're started.
Yes, please.
Okay. So good morning, everyone. Welcome to the QoreVerse webinar. My name is Michael Enajo, and I will be your creator for today. So the QoreVerse is proudly brought to you by Core Verifying Me Company, and we are thrilled to have you join us as we explore the interesting world of Core ID and the industry dynamics. So today's event will be a very interactive discussion that will assemble leading voices in the Nigerian and Ghanaian fintech space to delve into how regulations foster responsible innovation and sustainable growth within both countries. Okay, so this event will also give a comprehensive overview of Core ID's innovative solutions as we aim to provide valuable insights and takeaways that can apply to your business. Okay, so before we get into our discussion, let me reintroduce our main topic for today. The topic for today is regulation for growth, not control, striking the right balance in the Nigerian and Ghanaian financial ecosystem. Okay, now, so it's very important to understand that this is a very critical area as it impacts the industry that we operate in. And thankfully, we are gathered with some of the brightest minds today to share their perspective and insights on this. So before I go into introducing the speakers, let me use this opportunity to appreciate the Core ID team for putting this event together, especially because of how critical the issue we are discussing is in Nigeria and Ghana. Okay, so now it will be my absolute pleasure to introduce our esteemed speakers for today's session. First of all, we have Lamosi Ekenimo, a Senior Associate Regulatory and Public Policy Program Management for Flutterwave. She brings a great wealth of knowledge in law and legal research and regulation. It's also important to note that Lamosi is also a Nigerian qualified lawyer, over 9 years of experience working as a policy professional. Thank you. Hi, Lamosi, do you want to say something to our audience?
Yes, definitely. Hi, everyone that has tuned in. Good morning. It's a pleasure to be here with everyone today, and I'm really, really looking forward to having this discussion.
Thank you. Thank you. Next, please welcome Mr. Patrick Irebo, the head of Core Banking and Self-Service Channel, Core. Mr. Patrick comes with an extensive experience and expertise in fintech, management consulting, and banking. He's also a certified management consultant and a banker. Thank you, Mr. Patrick, for joining us. I'd like to say something as well to the audience.
Yeah, thank you, Michael, and thank you, audience. You're all welcome, and let's fun.
Thank you, thank you. Next, let's welcome Malaika Ademola Majekoduni, the program manager for Open Banking Nigeria. Malaika is one of the seasoned individuals advancing open APIs in the Nigerian banking sector. And through Open Banking, a non-profit orchestrating the emergence of open APIs within the banking ecosystem. It's also very important to know that she collaborates with stakeholders, including banks, fintechs, regulators, and consultants to implement open banking in Nigeria and in sub-Saharan Africa. It's also important to know that she's a senior product manager at FINCRA, where she leads the development and the launch of key payment solutions. Thank you for joining us, Malaika. Would you like to say
something? Yes. Thank you very much for that introduction. Hello, everyone. It's good to be here, and thank you for tuning in.
Thank you, Malaika. Fourth, we have Mr. Richard Npeku. I hope I got that very well. Richard Npeku, thank you for joining us. Mr. Richard is the Vice President, Legal and Strategy, Ghana FinTech and Payment Association. Mr. Richard is also a lawyer driving innovations at the intersection of law, technology, and entrepreneurship for Ghana. He also leads Ghana's foremost startup and technology-focused law firm, right? And is also the managing partner. So with more than 2 decades of professional and entrepreneurial experience across various industries. He is a sought-after legal practitioner. He helps provide legal toolkits, transactional and general business advisory, support and capacity building for businesses, especially for SMEs and startups in Ghana. Thank you for joining us, Mr. Richard. Would you like to say something to the audience?
Thank you for having me. Good morning to everyone. Looking forward to an exciting discussion that highlights the similarities and differences between the regulatory landscape in Ghana and Nigeria, and what we can do to harmonize innovation going forward. Happy to be here.
Thank you, Mr. Richard. Thank you very much. And lastly, but never the least, we have Chief Ngozirim Wokoma. So he's a senior reporter at TechPoint Africa, where he covers startups and venture capital. So over the last 3 years, he's provided insightful coverage of Africa's tech scene and has interviewed some of the continent's leading entrepreneurs and investors. Some notable names, we have Sim Shagaya, Idris Ayodeji Bello, and Nneka Eze. Thank you, Chief Ngozirim, for joining us. I'd like to say something to the audience as well.
Thanks so much for having me.
Thank you. Very short, very brief. Thank you very much. Okay. Thank you to the audience. Thank you for joining us. We appreciate you guys for being here. Please feel free to use the Q&A portions of Zoom, and also we'll be having polls in between conversations. Please feel free to participate, as they are very, very important to have a very, very interactive discussion. Okay. So we're about to get into the discussion proper. So let's begin. I'll start with Ilamosi. Ilamosi, how are you doing?
Yeah, I feel very much put on the spot, but I'm very well, thank you. How are you?
Fine, we're fine. Thank you for joining us. Thank you. So without much further ado, we'll get into it. So let's start with like a broad view, right, of regulatory frameworks, right? Let's get a broad view of regulatory frameworks and innovation in fintechs. So would like to hear some of your thoughts on this. Just a broad view of some of the frameworks we have in the fintech space. If you could please shed some light.
Okay, so I think that's a really interesting question, because I think it was last month I was discussing this in a class that I was taking in Rwanda. For regulatory frameworks for fintech companies around the world or globally, I would say that there's a lot really to go around. One of the ones that I think we'll be discussing in today's webinar are risk-based frameworks, which is not something that we'll get into that when we get into that. But there are lots of frameworks. You have and it depends on the country, it depends on their regulatory model generally, it depends on the government of the day, it also depends on the regulatory needs of each country. So for example, in Africa, generally what we see is that there's a lot of growth in fintechs, for example, and it's just because of the kind of regulatory models we have. As compared to the rest of the world, which is shocking, we do have regulatory models that sort of encourage fintech specifically to grow. So you have a more collaborative approach, a more collaborative regulatory model, like in places like Africa. That's very common, as opposed to maybe places like the US. You have to there's a lot to be done if you want to work, if you want to set up a business in places like that. So I think that it depends. I mean, it depends on the region we're talking about. It depends on the specific country, and it depends on the circumstances. But there's definitely like a lot actually to go around as regards fintech regulatory models.
Okay, thank you very much. Thank you very much, Lamos. I know we have one other lawyer in so I know Lamos has given us for the Nigerian space. So Mr. Richard, for the Ghanaian space, could you just give us a broad overview? Something about, I know we're going to go into risk framework, or just
I think one of the things that is generally true in the Ghanaian space is that fintechs or startups are recognized as businesses generally. So as any other business is regulated, fintechs are regulated in similar manner. The only distinction is that because they provide specialized service, particularly in the financial space, then we have specialized regulations that come into play. For instance, the licensing requirements from the Bank of Ghana, if you are providing a fintech solution. If not, the laws of Ghana applies generally as they will apply to every other business. Rather, what we are beginning to see is that there is now the commitment to put into action a startup act, which then seeks to provide some form of specialized intervention to support the ecosystem to grow. At the moment, it has not materialized into a legislation. It's still being considered, and a lot of stakeholder engagement is ongoing. I know in Nigeria, the Startup Act has been enacted and is in force, but in Ghana, we do not have any such specialized intervention to support the ecosystem, except for the general business regulations and then the new frameworks that have been established by the central bank for the regulation and supervision of fintech innovation because they are financial services. So currently, that's how the space is. We are hoping that as more attention is devoted to matters affecting startups and fintech innovation, we'll begin to see a lot more work being done to bring into fruition the Startup Act. That would then make specific provisions for how incorporation matters are handled, how ownership structures are aligned, and how matters of tax, exemptions, incentives, and support for the ecosystem, so we can see some real growth and commitment from the state towards the ecosystem. So that's how the regulatory space currently works in Ghana.
Okay. Thank you, Mr. Richard. I noted some few things, like you said, the Startup Act. We'll get to that in a bit. So I just want to now, for Malika, for Mr. Patrick, for I just wanted to know, so how do these regulatory changes, these constantly changing regulations, how do they contribute to fintech startup failures? We can start with Malika first. So how do these things affect fintech startups?
Okay, thanks a lot for that question, Michael. So I think it's in how maybe the fintechs would position themselves, considering that in this industry that we are playing in, a lot of things are happening on the fly, so to speak. So to go into what I'm speaking, basically within this industry, we see that there's a lot that happens, and the regulations that are coming out are sort of novel and new. It's like sometimes they're playing catch up in terms of things that have happened and how in response to different situations and scenarios. And so the policymakers are maybe responding to those changing dynamics, maybe out of concern or fear. And so they dish out something that might affect a business significantly. I think what is expected is that it's expected, given that it's uncharted territories for everyone right now. We're growing, the fintech industry is booming and it's moving quickly. And I think it's wise that people sort of place themselves or stand in a position or put themselves in a position where they can quickly pivot and adjust according to how these regulations are moving and changing quickly. It does, we see how certain businesses, not to name names, but I know so many businesses that were booming and at the top of their industry, and one regulation literally brought their business to crumbles right before our very eyes. They had such stable solutions, but that inability to quickly pivot and turn things around in terms of your business caused those solution providers to just go out of market, and that's the last, or we barely heard of them anymore. So I think that's something important to keep in mind as the regulations change.
Okay, thank you. Over to you, Mr. Patrick. So how does changes in the regulatory space affect fintech? How does it contribute to failures of startups?
Thank you, Mike. My perspective, I'll just have to go direct, right? Having been in the fintech industry for a while, we often see startups come and go. You see investors put money in startups, and the next thing is one thing or the other happening, and they're no longer in existence, right? Personally, I attribute it to a number of things. One of them is the heavy compliance body in our industry. Am I audible?
Yes, you are. Yes, you are. I can hear you.
Right. And the next one on clear guidelines. Next to is frequent changes in consistency in the guidelines and policies of the government. Then the especially in my aspect of fintech, we see a whole lot of capital requirements and licensing fee problems. Then you get high fragmented frameworks where you see different regulatory bodies, giving different policies for the same fintech organizations, and then ambiguous legal definitions. I'll just take a few of them, and I will start with the capital requirement and licensing fees. Especially in the banking industry, you see some guys that have sweet innovations that they want to bring on board, but oftentimes you see that it might not come to fruition because of the amount required for licensing. Sometimes when these regulations are done, the regulators concentrate mostly on the established and existing fintech companies. They fail to put in consideration the startup companies that are coming up. So when they do these regulations, it's generalized, right? So you must bring 200 million to have a class of license. You must bring 2 billion to have a class of license. They don't consider that there could be these guys at the comfort of their home coming up with a very good innovation that haven't gotten investors but needs to test the market, right? The platform that can incubate them to get to that level where they can now say, okay, we'll be able to get capital, we can actually afford these licensing fees. It's not there or has not been there, apart from recently some things are coming up. Then when it comes to the ambiguous legal definitions, sometimes you ask a fintech company, many fintech company related terms and activities that lack clear and legal definitions in Nigerian law, right? You get a policy, you are not, sometimes even the regulators are not able to even define them clearly for the other companies. And at the end of the day, they end up falling short of some of these terms and definitions, and it often leads to sanctions. And at the end of the day, when the fintech is not able to cope, what happens? They shut down. We hear that one of that fintech has gone down. So some of all these things are things I feel, just few of them I just mentioned, are the things I feel that are leading to some of the failures of our fintechs, especially in Nigerian context.
Okay. Thank you, Mr. Patrick. Few things. You said constant, the few keywords, constant changes, capital requirements and licensing, and some of the legal definitions around some. We're going to get back to that. Chikazirim, I think I'll tweak the question a little. I'll say, what role would you say media has in disseminating this information, right? And it's not just putting the information out there, but putting the information out there in a way that us individuals can digest, okay? And also spread the news as well. So what role and how does media contribute to this?
Okay, so I think the media plays a very huge role, and how we communicate that is also very important. So I think the first thing to state is that the principle that guides how journalists communicate any regulatory change or any regulatory development is the same that guides any communication at all from journalists, whether it's the news of a new startup launching, or the news of a startup dying. Like it's still the same principles that guide it. And the reason I'm making that distinction is that not every media outfit is a journalistic outfit, right? And I mean, if you look around, you'd see a number of media outfits that are not exactly journalistic outfits, and people often try to hold them to the same standards as you would hold a journalist. And then on the other hand, you also see people who try to classify everybody as a journalist. So just trying to make that distinction before I continue. But again, something else I would say regarding clarity is related to something that Patrick just mentioned, which is clarity needs to begin from the regulator. So just recent, I think a few weeks or a few months ago, the CBN released a regulation, and for a couple of days, literally half of the country misinterpreted it, right? If the regulator leaves a lot of room for interpretation, then how does your legal department, for example, understand what's required? I mean, I asked a few founders around that period, do you understand what this means for your business? And they're like, not really, we don't. But our legal team is working on it. And even a week after, I was still hearing different opinions from lawyers, from startup founders, right? So if the people who are directly affected by this do not understand this, it's a bit difficult for you to expect journalists to understand it any better, right? So I'd say that regulation clarity needs to start from the regulator. So when you send out those circulars by 5 p.m. on Friday, make sure that we don't get confused and then spend the rest of our weekend trying to figure out what to mean. But to respond to your question, I think what journalists can always do is only report what you understand. If you don't understand something, I know that there's a temptation to want to be the first to break the news, but if you respond to something if you report something you don't understand, you risk misleading the public or anybody, right? It's usually we often update articles where necessary, but not everybody's going to look at or find your updates. So always report what you understand. Where you cannot, try to reach out for clarification. So that's why it's important to build relationships with experts, speak to policy experts. There are people whose day jobs is just basically understanding, interpreting what the regulator is saying. If you also can get to the regulator directly, it also helps to speak to them. There's a principle that I was taught just as I started as a journalist, and that's assume that the person you're speaking to isn't an expert and just communicate that way. If you assume that the person is just a random fintech customer and he doesn't understand what it means when you say that IMTOs, for example, can't obtain FX at the regular window, if you assume that when you're writing such an article, then you tend to communicate differently. So just assume that everybody isn't an expert and communicate that way. People usually say communicate like you would to a 5-year-old. I don't know if you want to do that, but just make sure everyone understands that. Again, no shades to lawyers or Nigerian lawyers, but don't write like Nigerian lawyers, right? Don't obfuscate language. And I know that we often do this when we don't understand what the regulator has said, which returns to what I said. Don't write if you don't understand. So don't write like Nigerian lawyers again. The format is also very important. Sometimes a simple article that just says, oh, this is what's happening, doesn't always cover all the bases. You may need to do an FAQ. I've had to do FAQs, and I and my colleagues, we've had to do FAQs occasionally to respond to certain regulatory changes. So what are some questions that you anticipate that the public is going to have, or even the people who are involved? What are some questions you anticipate that they would have? Create an FAQ and just respond in that format. It helps because one thing that you would learn when you do a little bit of media work is people don't exactly read a lot. So you need to make it easier for them to read. So the format you also deliver that information is very important. So funny enough, people, I hate FAQs, but it gets the message across and people read it a lot. So you may also have to consider the format that you want to deliver that information with. So yeah, I think those are some things that the media can do to help with communicating regulation.
Perfect. Thank you. I saw a lot of people agreeing with their reactions. So yeah. So what I hear from you is regulators, first of all, need to be a lot more explicit. They need to be able to give you information that is digestible, right? And we're saying that lawyers need to be a little less lawyers and a little more human beings, right? So yeah, I definitely agree with that. So this is a nice segue into my next question for Ilamos. So just after hearing the general overview of regulations and I'm hearing how the media plays a role in this, I wanted to now ask, what are some of the risk-based frameworks that can be implemented to balance innovation and consumer safety? So over to
Okay.
you, Lama.
Okay, so this is a very interesting question. Allow me to nerd out for a little bit. So when you say risk-based frameworks, like I mentioned, there are different types of frameworks in existence. If you say risk-based framework, and this is just for the general audience, I'm trying to adopt what Chigozirim said and not use lawyer speak. So I'm going to break it down before they drag me. So a
Please.
risk-based framework basically means that, think of it as a sliding scale. At the top here, you have like high-risk businesses or high-risk business models or high-risk products. At the bottom, you have low-risk business products or business models, etc. So what a regulator does is that depending on the level of risk that a company's product falls within on that category, or within that range, they implement the laws based on the risk. So if you have a very high risk product, then you get a lot of regulation. There's a lot of scrutiny. They look at every single thing you're doing. They ask you to report 1, 2, 3. They are literally like looking at you like this. But if it's low risk, typically what you just have is, okay, tell us what you're doing. Okay, make sure you're not harming anybody, you can go. So that's what a risk-based framework is. We don't really operate that in Nigeria. So this is a very interesting, or even in Africa, really, but this is a very interesting question. So, I mean, we'll get to the part of the question, but let me answer generally first. So that's a risk-based framework. It just allows for proportionality in how and this is the lawyering part now, it allows for proportionality in how regulators impose obligations on adherence to the law. That's basically it. It's not really common in fintech spaces. It's more common in maybe AI, data protection. You see it a lot there. But now let's get into the fintech part. Can you say that Nigeria has, or even African countries have risk-based frameworks? In some way, yes, because we have frameworks that address certain risks. Like in fintech, the major risks are, I mean, this is just broadly speaking, maybe 3. You have operational risks, you have cybersecurity risks, and then you have compliance risk. Operational risks is basically anything that happens in the operations of the company that could be injurious to maybe funds that are stored with the company, generally funds actually, because we're fintech. So anything that happens that affects the operations, which affects the funds, can be classified under operational risks. This includes like maybe when you're trying to make a transfer, it doesn't work, when customers don't have access to their funds. And Chigozirim again works in the regulatory space, in the reporting space. So he will know that of late, a lot of companies, their customers have come out to say that, they've not had access to their funds, they've not been able to make, they've not been able to withdraw money for months, things like that. So that's something that is now more common in the Nigerian regulatory space. So those are the main risks basically involved in the fintech space: operational risks, cybersecurity risks, and then compliance risks. So do we have laws that address this? Yes. So we have laws that address cybersecurity risks. There's a whole list of them. The CBN has various frameworks on this. There are the different ISO standards. I don't know how I can explain ISO standards to the audience here, but please bear with me. There are different ISO standards, and all of these just ensure that when you are, and then we have other cybersecurity laws in Nigeria, obviously, but all of these laws just ensure that when fintech companies are, even banks, traditional financial institutions, when they are carrying out transactions with your money, they protect your money well. And then compliance risks. Compliance just means like, how are you complying with the laws? So all the laws that we have that govern this fintech, how are you complying? So the risks here could be maybe they're not doing their KYC compliance. Well, KYC is know your customer. So maybe they're not doing the appropriate checks to ensure that this person is not a fraud or this person is who they say they are. So for example, if I'm a scammer now and I take somebody's identity and I use it to register with a fintech company or a fintech platform, the fintech platform ought to be able to flag that, I'm a scammer, I'm not who I say I am. If they're not able to do that, it's because they've not followed the appropriate, KYC compliance regulations that they ought to follow. So compliance risks are a big problem. So like I said, those are the three big risks. Do we have laws that address this? Yes. Cybersecurity risks, I've already highlighted them. For compliance risks, yes, we also have laws. The problem for these two categories, for operational and for compliance risks and cybersecurity risks, the problem is implementation. It's not a lack of law, it's just like a lack of implementation. So we also have, like, in the past few months, situations where fintech companies are not maybe compliant, and then we find out after everything has gone to shit, sorry for my language, when everything has scattered, basically, when customers can no longer access funds, they found out that the CEO was doing this and that. So that's when we now find out, okay, they've not been in compliance, but who was checking them before? So it's not a lack of frameworks in that sense, it's a lack of maybe implementation frameworks, to be more specific. For operational risks, this one, there's a little bit of a lack of a framework completely, because I mean, if you have who is protecting investor funds, for example, who is protecting customer funds, to the extent that if there is if you cannot access your funds, this is somebody this is a body you can complain to, that you can ensure that they will make sure that the fintech produces your money, like maybe under 24 hours. There's a little bit of a gap there, maybe a slight regulatory gap there. So that's something that we maybe need to address as regards, the framework. So I think I hope I've been able to answer your question, very, very succinctly. We do have frameworks. They're not exactly risk-based. They do address some of the risks, and some of the risks are not addressed at all. Does that help?
Thank you. No, yeah, yeah, very, very insightful answer. I like, again, people agree with the number of reactions I can see. So before we go to our next lawyer, I would like to actually, because I realize that we're speaking tech jargon, right? So I want to go over to Malika, right, and understand something. First of all, what is API? So for our audience, what are APIs, and what do you mean by banking? So let's start with that. Over to you.
All right. So to put this very clearly, APIs are basically, the full meaning is application programming interfaces. I know that even sounds even more complex than hearing API. So, APIs are basically the ways your system communicates with one another. That is, applications, your device, everything talks to each other using APIs. Now, to come into open banking, like you mentioned, so open banking is a standardization, or just a standard. It's like another regulation, so to speak. There are people that look at open banking from a product perspective, that is like open banking as a product, as we've seen in like the likes in Nigeria, like likes of Mono, Okra. They are implementing open banking as a product. But when you take a step back and really visualize what open banking is, it's more or less a standard that ensures there's like a uniformity across how systems talk to each other. So that brings back the whole APIs. So open banking is a standard of APIs, or open APIs as the industry likes to call it, where each API that talks to system A, the way system A talks to system B, is uniform across it. And it's a way of opening up products and how we build products, meaning that for example, in the context of open banking, if I want to speak, or if I want to integrate with Bank A for a certain service, that is customer account creation, just for example, the way I will integrate with Bank A, that is the APIs I will use to call and create a bank account, wouldn't be no different from if I go to Bank B, Bank C, Bank Y, Bank Z. That is what open banking serves to do. So that those APIs that different systems implement, and they're talking to each other in different ways, open banking tends to standardize that API so that it's the same across board.
Okay, perfect. Thank you. You see, so hence the regulation. You see, so it makes sense, right? It has to be regulated. Yes. So over to you, Mr. Richard, right? Yeah, thank you. So over to you, Mr. Richard. What are some of the risk-based frameworks, right, that could be adopted in the ecosystem? What are some of the risk-based frameworks that that could balance innovation and also consumer safety?
I think we need to take a step back some decades ago.
Please.
And then begin to understand how we got to have a system called the financial sector. And if you look at that critically, you will see that the only reason we have a financial sector is because of the frameworks that have been put in place to protect people against the risk of losing money. So if you look at it from that angle and you see what we are doing today, where we are applying technology to what used to be financial services, because basically that's what fintech is. Digitizing and applying technology to what traditional banks used to do. In that space, we have accelerated the concerns that we have, because now we are beginning to deal with entities that do not have offices, that do not have branches, that do not have known places that you can walk to and say, okay, this is their office. I brought 2,000 naira here yesterday. I want my money, or I want to use that money to perform a transaction I intended to perform. So that has amplified the concerns that a lot of us or industry stakeholders are having. And it was rightly highlighted by Akim Miwo, the Nigerian lawyer. And that's, sorry I murdered your name. And those concerns are also highly on agenda in Ghana. So if you look at how regulations are being formulated and implemented and expectations of compliance is engineered, you see clearly that it is one, ultimately to protect the end consumer. How do we protect the end consumer? Ensuring that the end consumer in the use of the technologies we develop is not exposed to risk around technology. So cyber risks, fraud, issues of impersonation, issues of identity theft. So generally, there are frameworks that ensure that these protections are available to the end consumer. So one of the ways, for instance, the central bank in Ghana has implemented this is to ensure that every customer who is seeking to participate in the financial sector is onboarded using their national identification card. So we have what we call in Ghana the Ghana card, which is supposed to it's a unique identifier for every Ghanaian. So now every fintech, every traditional bank is required to only onboard customers or keep account and run account of only customers that have been able to link their Ghana cards to their account. What that does is that it enables the stakeholders to be able to trace quite easily who is using the account and for what purpose. So that is one. In terms of infrastructure on the part of the fintech companies or on the part of the players, there is a high standard for ensuring that you comply with iOS certification systems, PCI SSID certification, to ensure that you have a robust IT system which is not prone to hacks, which is not prone to interference from third parties that do not necessarily must have access to your platform. Compliance-wise as well, there are a lot of frameworks for how even individuals who can either be directors of the company or become owners or shareholders. The reason simply is that we need to create a barrier to prevent what we may call the bad guys from gaining access into the financial sector and using that to perpetrate any fraud or to advance their business as they ordinarily would do. So what you see the regulator do is to establish a standard which requires persons of a certain caliber, a certain qualification, a certain level of integrity, what they call the fit for purpose, to only be those persons that will either be directors of financial institutions and fintech companies or will have ownership of those companies. The reason being that if we are able to identify those that own these companies, it becomes easy for us to be able to hold them accountable. And because usually these are persons of integrity, men and women of integrity, there is also that calling on them to expect that their businesses comply with certain legal regime. Beyond that, there are several laws around anti-money laundering and counter terrorism financing. There are laws around customer protection, so you are expected to have a customer protection policy. There are laws around data, and data has become a primary gold mine. So in Ghana, for instance, we have the Data Protection Commission, which ensures that not only do you register with the commission as an entity, that you are also complying with the regulation around how data is collected, how data is processed, how data is used, how data is even shared among entities. And underlining all these use of data is a customer consent. So customer must give consent to the collection, use, and sharing of that data. And that regime is becoming a very standard requirement for all entities, not only for fintech companies. So broadly, there are several regimes that are in place, particularly because of where we find ourselves today, where everything has gone online, everything has become anonymous. We only see APIs communicating with another API and transactions take place. We're beginning to reduce the interference of human beings. So those innovations have highlighted or brought to the fore a lot of concerns, and the regulators, the stakeholders are also up to the task and are ensuring that several frameworks are put in place to ensure that ultimately the financial sector is held together. We still have the consumer interest at play, whilst innovators work to create value for their stakeholders.
Precisely, I agree. Thank you, Mr. Richard. Mr. Patrick, something tells me you have an answer, a burning answer to this question. Yeah, something tells me you have an answer to this question. You have an answer to this question. That's what risk framework could be adopted, and if you could also tell us, we've heard from lawyers. Please hear from a business person. You know what I mean? Yeah, somebody that optimizes banking operations. Get your view on that as well.
I didn't get the last part of the question.
Okay, so the question is, what are some of the risk-based frameworks that could be adopted, right? So we've heard from the lawyers, right? So I would like to hear from a different angle. So what are some of these frameworks that, let's say I'm a fintech owner, for example, what are some of the frameworks I can adopt in my own business?
Okay, as a fintech or as a startup fintech, mostly the early startup fintech, I have one. This is actually coming from the earlier question of why they are failing and the framework I think they can adopt, right? One important one is what I call regulatory sandboxes, right? For new fintechs that are coming up, they should engage more on pilot programs, utilizing regulatory sandboxes to test new fintech innovations in a controlled environment. This allows for both regulators and fintechs to understand new technologies with temporary relaxed regulations. The CBN has an initiative on that. They launched it, and of course, it's called CBN Regulatory Sandbox. This initiative allows startups to test their solutions in a controlled environment, right? Reducing regulatory risk and, of course, fostering growth, right? The process is just for startups to typically apply to participate in this sandbox, stating that their innovation is beneficial and that they can manage potential risk. So before scaling their innovations, After successful testing, companies can scale their operations with greater confidence and, of course, regulatory compliance, or they may need to make adjustments based on the findings from the sandbox trades, right? So, and more collaboration will be with the with the with the regulators as well. You know, sometimes we, when I say we, I mean those of us in the fintech industry, we sometimes we try to find a way to go around these regulations, right? When there's a particular regulations, we read it based on our understanding. Okay, if I build this, I don't need to do this so that I don't get caught up with this, right? No matter how you do it, there has to be regulation, and it doesn't come up now, it will come up later. And of course, when such comes up, it might end up affecting your business in the long run.
Yeah, I agree. Thank you very much, Patrick. Before I come to you, Chigozie, I have a question for Aka. So there's a comment, will I say a comment, a statement. People say open banking is a threat to KYC, KYB businesses. I think I've heard that being mentioned somewhere. So I wanted to get your take on that, or if you have a take on that statement, that phrase that says open banking is a threat to the KYC, KYB.
Okay. So I would say I think it's maybe even quite the opposite.
Okay.
In my opinion, especially having worked with it for quite some time, interacting with people, seeing the regulations and how it's been designed. So I understand, what the KYB or what the concerns with, KYB and KYC businesses are, being that, with open banking, kind of what they're offering at a premium is going to be sort of open or readily available and given to all. But I think it's more or less a charge to them in terms of how they innovate on top that openness or that exposure that has been granted with open banking. So I say this because it's actually not stifling their businesses, but giving them opportunity to even scale and go beyond what they currently offer. There are certain limitations that their businesses face now in terms of how do you cater to the grassroots, or how do you cater to the, maybe not the grassroots, underbanked populace. How do you offer solutions to those markets right now? A lot of these things are not available in standard solutions. If this people or this group of people do not go to a bank to register and get BVN because they trade mainly in cash and collecting money from their hand-to-hand exchanges, or they don't have their NIN to link to their phone because everything is done within their remote, populace. And how do you expose KYB solutions to that market? This is where I actually think open banking opens up doors in that aspect, because with open banking solutions, you're able to go partnerships that might have been a challenge initially. It's going to allow some seamless transition between markets, right? I think the goal for open banking now is not even just open banking, but eventually open finance and even beyond, in the sense that every aspect of one's financial life can be open and connected. And so for these in the maybe more rural or more remote areas where maybe all they have access to is just their phone, their normal dumb phone. I think my sister calls it talusobe. I don't know what they call it here, but those very small phones that's all they have, no internet connection. There are so many ways you can pay with USSD. In fact, Open Banking Nigeria had done a use case as to how content management could be achieved with over USSD. that is sending a code via USSD, you enter the number and activate it. That's consent management, really. And that's USSD, no internet needed. That's it. So open banking will allow certain reaches between telcos and banks now that we have not really tapped into as much as we should. And it would allow us get to that point where we can definitely get into more markets. And these KYB and KYC businesses are all the better for it, can leverage it and build beyond what they currently have.
Actually, okay, yeah, a lot of people in agreement as well. I like that. So what we're saying is, the goal of open banking is basically higher financial. That's what it's on. Okay, I agree as well. Sorry, over to you, Chikaziram. I wanted to find out where would one, or what are some of the, well, I say outlets, or where would an enthusiast, right, that's concerned about regulatory stuff, where would they find information? Where would they be able to find information on some of these things? You know, do you have, are there journalistic sites, or would you rather recommend you going directly to the source? What would you recommend for trying to get more information about them?
Okay, so there are a number of sites that you could use. Sadly, we do not, I don't know if you said or not, but we do not really have a repository of all regulatory data. I found one recently. I can't remember the name right now, but I found one and it wasn't up to date. So I can't really say you should use that. But first would be, if you're a fintech, obviously you're most likely going to be playing with the CBN. Visit the CBN website regularly. So yes, they put out a lot of the policy changes that they make on the website. So they have all the circulars, you would find them there. Then the SEC is pretty similar, although sometimes you may be looking for some information and you never find it anywhere. So I think depending on the government agency that you have to deal with directly, that's like the first place that you should start with their website. You'll be able to get like the actual document. Hopefully they put it out there, but that's the first place. Then you could also check on the regular platforms that would have such stories. So yes, go visit TechPoint Africa, shameless blog. We would almost always have every regulatory move on the website, so you could go check out TechPoint Africa. I'm not going to name the others. You will go find them yourselves because they're my competitors. So yeah, check the regulator sites, check TechPoint Africa, and then I think if I find that I can share it later. I don't know if Ilamosi or Malika would, like, if they know what I'm talking about. It's like a website that just tracks all regulatory moves in Nigeria. So I don't know if they know about it.
Okay. Yeah, thank you, Chikaziram. I also wanted to, before I get into the next, if I go to the next speaker, I want to please let the audience know that our Q&A box or our Q&A chat is very much open. I can see some hands are up. Get to you in minutes. Well, please use the Q&A. Q&A is the best way to get your questions across. So now to Ilamosi. Mr. Patrick made mention of something I wrote down here. He said sandbox. That's sandboxes, right? And he spoke about how key sandboxes are in terms of collaboration, if I'm not mistaken, Mr. Patrick. You mentioned how collaboration is key. Yeah, right, sandboxes. So, Ilamosi, could you please shed some light about regulatory sandboxes, and also how can these sandboxes be utilized to test, some of these models?
Okay, thank you for that question. To just respond to Chigozirum quickly, yes, I think I do know what you're talking about, or you can think offline to confirm, but yes, I think I have an idea. As regards to sandboxes, okay, I know that we say sandboxes a lot, like it's something that you hear in every fintech space, but like, does anybody actually know what a sandbox is? So like the way sandboxes work, the idea of a sandbox is like from the children's playground. You have the place that has the swings, all that place is cemented, and then you have a square little space that has the sand inside where children can play. And the whole idea of that is that they don't want the sand everywhere. They want it to be in a controlled environment. That's what a sandbox is. It's a controlled environment where fintechs, which are the children, can sort of play so that the regulator ensures that they don't spill sand, if that makes sense. So, I mean, how do sandbox work in practicality? Sandbox are typically used for testing new technologies. So think of new technologies again as like little children. They can run far and fast, they can destroy things, destroy themselves, harm other people. That's the whole idea. So how do they work essentially? There's a new idea. Maybe there's a couple of companies who want to maybe improve financial inclusion in Nigeria. So they've come up with all these different ideas. There is no law in Africa, maybe, or maybe in Nigeria, that sort of regulates these kinds of companies specifically. So what happens? So the CBN says, okay, all of you come. You put them together in a room, let's just say hypothetically, and they say, okay, this is your product, right? Explain it to us. Okay, we want to regulate this thing, but we don't necessarily understand this thing yet. So what you're going to do is this. You're going to continue building your products. You're going to show us how it works. You're going to submit these documents to us. Let us understand. Let us like be working hand in hand with you for a couple of months to see how this your product works. These are the regulations that we want to propose for this your new technology, but let's see if it will work in practicality. So for example, the CBN might be saying they want access to maybe all the transactions done in a day. Maybe, because regulatory agencies are very skeptical in especially in this part of the world, whenever it comes to anything that is new. The approach is typically to hammer down. They want you to pay money. They want you to submit all the documents. They want you to come to the office every 2 weeks. And some of that is not really possible if you're a new business. So sandboxes are a way of meeting in the middle to help both regulators and the regulator to agree on what regulatory measures work best, basically how best to regulate the thing that's the new technology that has come up. That's essentially what a sandbox is. So sandboxes are typically used for any emerging technologies. What happens is that there's like a call that is put out. Okay, if you're an emerging technology in this field, submit. Like the CBN had one, it's closed now. But if you check the CBN website, or if you Google CBN regulatory sandbox, you will find it on their website. It explains everything there. There's a very long, very clear document. It shows you how to apply. It says the documents that you should bring. It says apart from documents, what does it ask you for? It says documents, it asks you for certain requirements that you must meet. And at the end of the sandbox, all the regulations, quote unquote, that you sort of agreed on now become law. Like, the CBN has like circulars, the CBN has all these documents that are subsidiary legislation. So they now become sort of like law that governs all those people that were in the sandbox. And then there's a transitory period whereby the CBN still like helps. Okay, the CBN allows the maybe fintech to launch into the world and says, okay, you can go. These are the regulations, you can go. But they'll still be working hand in hand to sort of tweak the final, whatever else might be maybe problematic, something that they didn't address while in the sandbox. They still have that little transitory period where they can fix all those things until it now becomes like a proper legislation. So that's what a sandbox is really. It's really not complicated, and that's how it is used for new technology. So to answer the question, how can regulatory sandboxes be utilized to test new fintech models? Just by using the sandbox. That's what sandboxes are made for.
Right. So the answer is kind of embedded in the question, right? So before we go to Mr. Richard, Mr. Patrick, I'd like to ask, so how can these leaders, right? How can we collaborate with regulators? I'm curious as to know, like, how do we business owners, how do we management consultants, how do we head of operations and the big titles, how do we collaborate with regulators for a better, a more effective landscape,
All right, thank you, Mike. How fintech leaders can collaborate with the regulators? First of all, I would say communication, open communication, right? Sometimes the people that make our regulations might not be, they could be experts in the fintech, but you and I know that technology and fintech evolves. Technology changes every day. They require constant update of their knowledge and experiences. And the regulation that could be applied, that could be available today might be one made 2-3 years ago. You and I know that that could pose a lot of risk or problem for startups that are coming up with new innovations, like regulations that are made like 5 years ago, never put in consideration that there could be something like AI. Now, AI has come. A lot of people are applying AI in finance and fintech generally. How do we solve this issue? Is by open communication, regular dialogue. Start for the regulators to establish a regular meeting and forums for continuous dialogue between fintech leaders and regulators to discuss trends, discuss challenges, and of course, regulatory impacts. Then feedback mechanism as well, implement formal channels for fintech companies to provide input on proposed regulations and share, of course, their operational insights with the regulators. With this, they will be able to have updated knowledge and information of what is going on. Of course, if possible, also establishment of joint task forces, right? Kind of industry regulator partnership. Form a joint task force that includes both the representative from the fintech and the regulatory bodies to develop policies, guidelines, and of course, best practices, right? Knowledge sharing facilitates the exchange of knowledge to keep both regulators and fintechs informed about both technological advancements and regulatory needs. And I will not I will not be overemphasize the clarity in regulatory and of course the flexibility. Clear guidelines. Advocate for clear, precise regulatory guidelines to reduce ambiguity and help fintechs understand compliance obligations. Flexible regulations promotes adaptable regulations, a regulatory framework that can evolve with the fintech startups without compromising consumer protection as well. So if all this clarity are there, if all these collaborations are there, I believe our problems will be half solved. Lastly, I will also advocate for risk-based approach. That's what I call it, right? Proportionate regulation, where a regulation that encourages a risk-based approach, where the level of scrutiny matches the risk posed by fintech activities, right? Ensuring that a low-risk innovations are not overburdened with high regulation. If possible, to classify them into 3 categories: 1, low risk, medium risk or middle risk, and high risk. If you're coming up with innovation that is low risk, you are classified under low risk innovation. You shouldn't generalize the whole fintech industry with the same regulation. Somebody could be coming up with a regulation that doesn't really that may not cause financial loss in any way. There are different aspects of fintech. Core ID is part of fintech. You one of your the product that you have might not necessarily interface with people's funds or customers' accounts. So regulations that could guide such kind of innovation shouldn't be the same like a regulation that guides a financial institution that provides that takes deposits or that gives out credit, right? These guys deal with funds. These guys deal with customers' accounts. It's different from regulations that you could apply to a fintech who is just there to enable these other guys to work. Then have a medium risk framework also that guide those that you can classify to be medium risk. Then high risk, those guys that take deposits, those guys that take investments, they can classify them as high risk because if anything happens to them tomorrow, people's funds will be gone. So you classify these risks in 3 different categories. You were able to save those that don't need so much guidelines and policies, and also apply it to those that are needed. So that.
Thank you very much. Thank you very much, Patrick. Miss, before we continue, I would like, this would be the best time to have a short break. Let's do a 5-minute break, and we'll come back and we'll continue our conversation. We're going to touch on 3 key topics when we're back. One is data privacy. The other one is financial inclusion. And the last is the media and industry influence in our ecosystem. So before we go for our break, I would like to invite a sales rep from QoreID to please give a short a bit more about QoreID's innovative. And during this period, we would also have some quick polls for our audience to participate in. Please, it's very important to note that your feedback is very valuable. So at this point, I would like to invite our QoreID sales rep to please take over.
Hello, everyone. Good morning. Thank you very much, Michael.
Thank you. Thank you. Welcome, Amanda. Please go ahead.
All right. Hello, everyone. Thank you for joining us. My name is Amaka Nweke. I am the sales team lead at QoreID, a Verify Me company, and I hope you're all enjoying the webinar so far. I know I am. Over the next few minutes, I would like to speak with you about Verify Me's API company and web platform, which we refer to as QoreID. I will do my best to keep the presentation short and sweet so we can get back to the conversation. Before we get into what QoreID can do for you, I think it's important to provide clarity on why we created QoreID and how it interacts with Verify Me. Verify Me is a licensed ID authentication and eKYC service company. And in Q4 of 2022, we launched QoreID to separate our B2B and B2B2C customers from our retail and domestic customers, or anyone who requires a web interface to conduct their verifications. QoreID offers a data as a service via easy to integrate APIs and low-code SDKs to an array of industries like banks, fintechs, lenders, betting agencies, insurance companies, pretty much, and virtually anyone who requires trusted identities and consumer analytics for customer onboarding, customer profiling, and for compliance purposes. Our solutions for onboarding and analytics can be divided into 4 distinct categories. The first category is our infrastructure category. This speaks to our direct connection to authoritative government ID sources for IDs like the BVN, the NIN, the driver's license, the voter's ID, the CAC, and the tax identification number, which facilitates real-time verifications for individuals and businesses. It's also worth noting that we offer OCR for physical identity document checks. The second category is our technology category, which includes solutions that can be layered on the identity category, comprising of our AI-powered authentication solutions, like the face matching service, which allows you to compare a selfie taken by a customer to the image that is returned from the ID government database. This service is available over API or SDK. We also have innovative facial liveness check, which is an SDK solution that requires users to perform an action, such as moving their head, while our solution captures a real-time face scan of the customer to ensure that the user is physically present at the time of the verification to safeguard against spoofing. Our technology also covers an SDK solution for digital address verifications, and the service allows for businesses to digitally verify the address of their customers in real time. The next category is our last mile address verification category. This speaks to our logistics engine, which exists today with over 40,000 agents who carry out asset verifications. Our active cell of agents can conduct tier 3 address verifications, property and vehicle inspections. And depending on your use case, we can also provide guarantor, employment, and criminal record checks under this category. To conduct an address verification, our agents are assigned by their proximity to the address location and are required to physically visit the address. And with the use of our agent app, the agent can capture 3 key data points. The Those 3 key data points include the GPS coordinates of the address, 3 exterior images of the address, such as the physical structure at the address, a close landmark, as well as the street that the address is on. The agent is also, going to provide confirmation of residency of the applicant at the given address. All of this information will be returned to you in a report 48 hours from the time of the verification. Lastly, our consumer insight service, which is a service that is coming soon to our platform. Solutions in this category will allow us to provide our customers with alternative credit analytics, as well as income and statement verifications, which will help organizations to pre-profile their end users and assess their suitability or their financial buoyancy and suitability for credit facilities like loans. You can enjoy all of our services over one platform across varied countries. Currently, we operate in Nigeria, Ghana, and Kenya, and plan to expand to South Africa, Morocco, Egypt, Uganda, Rwanda, and Cote d'Ivoire in the near future. We have an array of customers who utilize our KYC services because they understand the importance of regulation for growth, not control. Be like them and sign up with us today at coreid.com. And with that, I shall be passing the mic back to our moderator. Michael, over to you, and thank you very much for having me.
Thank you very much, Amanda. Thank you. Okay. I think we're back. We can continue from where we stopped. Okay, so I think now we're getting into the thick of things again. Our next conversation is going to be around data privacy and consumer trust. So this is where a lot of people have questions. So let me start with Mr. Richard. This one, right? So what data privacy and security frameworks are needed to ensure consumer trust? Patrick. Sorry, Mr. Richard. We have Mr. Richard. Hi, Mr. Richard. Okay. Lamosu, would you like to take that question? Privacy and what data privacy and security framework to ensure consumer trust?
Sure. Pending when Mr. Richard comes back, happy to speak on this. So in order to answer the question, you have to first ask, what do you need to ensure consumer trust? What do consumers want? How do consumers want their data to be protected? Or what information do consumers want to be protected? In answering that question, the easiest things are their personal information, their name, their address, phone number. They don't want that to be given out. They also want their financial information to be safe. How much is in their account, how much they're sending out daily, who they're sending it to. So yes, you do have to share that information if you're a financial institution with some actors, with some third parties, but who are the third parties? The third parties you're sharing it to, is my information safe with them also? Is it being stored properly? Is it being processed properly? Is it being transferred properly? So I think these are the concerns that consumers have. So in order to ensure consumer trust, we need frameworks that address these concerns. Thankfully, we do have quite a number of them actually. There's the PCI DSS. So for those of you who don't know in the webinar, I used to work in data protection before I moved into the fintech space, both policy, but I used to do data protection primarily before. So I only very recently learned of the PCI DSS, but the PCI DSS is the Payment Card Industry Data Security Standard, and it just ensures that consumer data or customer data on their card, that's their card data, is well protected. So it tells banks and fintech companies what to do in order to make sure that that data is not compromised. Because if it is, it means that scammers, hackers, literally anybody could go and clear your accounts. Then we also have other ISO standards. There are lots of them. I'm just going to name 2 very quickly and then move on. We have the ISO/IEC 27001. Which is just an international standard for information security management. And the one that is my favorite is the ISO 29100 or 2900, which provides principles and guidelines for managing privacy risks and to ensure the protection of personal data, like by banks and financial institutions. So those are international frameworks. If we bring it down to Nigeria, and I'm sure all of you know these ones, we have the NDPA, which is the Nigerian Data Protection Act. We have the NDPR, which is the regulation that preceded the act. And then we have the NDPA implementation framework. There's a couple of new regulations in the pipeline under the NDPA. There's the GAID, if I'm getting that correctly. There's a bunch of regulation basically by the Nigerian Data Protection Authority protecting data generally. And then we also have sort of specialized units like the NFI, which is the Nigerian Financial Intelligence Unit, and they sort of specialize in ensuring that banks, financial institutions, and anybody that handles financial transactions basically ensure or comply with certain cybersecurity standards. And cybersecurity and data protection are like this because data protection says, okay, this is how you should protect data, and cybersecurity are the actual measures, like the walls that you put in between your data and like the hackers. So they're quite literally hand in hand. Anyway, the NFIU has guidelines on data protection, and they have guidelines generally, and these guidelines include requirements on customer due diligence, record keeping, reporting suspicious activities, etc. The NCC also has their regulations, and you might be wondering, why is that relevant? Well, as I'm trying to remember her name now. As Malaika mentioned earlier, there's a lot of USSD transactions going on now, and that is done primarily through networks like MTN, mobile networks, basically. So the NCC regulates that aspect of data protection to make sure that any information that is passing across that channel is secure. The CBN also has a cybersecurity framework. It has its guidelines on electronic banking, guidelines on risk management banks, a lot of guidelines on AML and CTF, which is anti-money laundering and counter-terrorism financing. All these guidelines, all these rules, all these regulations just to ensure that data protection is consumer trust is higher, data protection is ensured. But I mean, there's always a but. But as many regulations that we have, there's still like, yeah, there's always a but. There's still gaps that sort of need to be addressed. So I would say that in order to just to address and to ensure consumer trust fully, because a lot of older people, for example, they don't trust fintech companies. They always say they want to go to a bank where there's more they can hold in case their money goes missing. And there's still that gap, the gap between people who prefer traditional banking to financial technology because they're not sure of the safety of it. So there's addressing that gap, but addressing that gap is mostly through, financial literacy, telling people about the product, showing them that they are safe. But there's also a gap in that people who are using financial technology already, their data is not also very safe sometimes. So there's still gaps that need to be closed, like in those two aspects, I would say. Yeah.
Okay. Thank you, Lamos. So over to Malaika, as you mentioned, Malaika, in your response, makes sense to take it over to her. So I wanted to find out, Malaika, how does open banking APIs, how do they ensure the security and privacy of our data? And what some of the measures they taken to prevent data breaches and ensure secure transactions through open banking? Over to you, Malaika.
Sorry, it's like my network was a bit shaky, so I didn't get part of the question.
Okay, so can you hear me now? Is it better?
Yes.
Okay, so my question is how do open banking APIs ensure security and privacy of consumer data, right? That's the first part. And the second part is, what are some of the measures that can be taken to prevent data breaches and ensure secure transactions through these APIs?
Okay, so thank you for that. So for the first part of your question, that is, how does open banking APIs ensure security in essence, right? So the I'm not sure how many of us are, privy to, the CBN's regulations and guidelines for open banking Nigeria. But about in 2022 and also last year, they first released the regulatory framework as well as the operating guidelines, which followed after, as to how open banking would be applied within the Nigerian context. And I think it was a good attempt. It was a good job at ensuring that the bases were covered. So within this framework and the guidelines, they've clearly stated the responsibilities of the individuals, sort like that is the API providers, which are maybe the banks, the source accounts, and then the API consumers. They've quantified and qualified the different data and matrix and parameters that can be assessed and also tiered them. So there's the PIFT, that's like the basic information, basically general quantifiable information. There's also the MITs, and these are all like generic information. Then you go to the top tiered ones, which is like the PAFT, that has to do with your credit score, your financial history, and more in-depth knowledge about an individual, and those are on a higher tier. Now, what they went ahead to do with the tiering was to also specify which entities, based on how they have been, regulated, and the level and stage at which they are in, can access this information and who can access what. So that's on one part in terms of, okay, what we've written, the theory, how this should happen. Now, when it comes to implementation, I think they went, a step further and devised what would be called the Open Banking Registry. So this registry will stand as a data source or a monitoring body, so to speak, that would observe the parties and the players within the open banking framework. That is, the industries, the API providers and consumers, are they playing within what they have specified in the regulations? That is, so from the tiering system and the expectations of who is in which tier, are they meeting those requirements? And also sort of like a way to validate that, the party you are engaging is open banking compliant. That's what this registry serves. So that's on the maybe check and balance side of things. Now you go into the implementation of open banking itself. And a very, very key aspect to open banking is in terms of the standards of the APIs that are being used, as well as some of the methodologies that are applied. So I'll speak to that. At the center of open banking is consent and content management. And that is where customers are in control of how their data and their information is being shared. Meaning that before a business who is open banking compliant can access your information from your bank or a bank that you bank with, you would have to grant consent. And that consent can also be taken away. That's in summary what this regulation allows. Beyond that, even the APIs, that's the technology driving open banking, is a higher grade financial technology. It's called FAPI, that's financial APIs. It's based off an authorization method. Sorry, I'm getting so technical, so I'm just going to tone it down. But it's based off like an authorization method that is designed for financial interactions and exchange of data. So it has a different security protocol or a higher security protocol, and is to avoid certain exposures and leakages of data and things that could cause loss of money eventually. So a lot of how they've approached and broken down open banking, it's security has been like the primary driver and the something that has been at the back of everyone's mind while designing these processes. So from the point of the regulations and how you can access it, to the monitoring and ensuring that people are compliant, and even as far as getting started. So prior to, because I recently left open banking Nigeria as or just put that on the side. So before I left, what we were heavily focused on was the sandbox. So in open banking Nigeria, we're actually working together with NIBS and with input from the CBN to curate something that would serve as a sandbox and some guide as to how open banking can be implemented within the industry. That is also another measure to ensure that, even in how people are designing and building out the solution as well, they are keeping in mind the security. So these sandbox factors in the regulations and the controls that are in place for open banking. So I think in itself, it has factored in a lot of these things to ensure security. I think I may have veered off a little, so if you could just remind me the second question you had mentioned.
The second part of the question is, I think you've answered it, but what measures are taken to actually prevent these data breaches, actually ensure secure transactions through those APIs?
Yeah, so great, 2 in 1. So the answer in itself, so that also speaks to that as well. These are the measures that we've put in place, both as the regulators as well as the players, industry players that are building out these solutions to ensure that everyone is safe during this period and implementation.
I agree. You made mention of a couple things. You made mention of is it content or consent management?
Consent. So granting your
precisely right. So consent management. Okay. So consent management, sandboxes, and you made mention of an open banking registry as well. Okay, good. So let's hear from a different perspective. Mr. Who are we calling on? Mr. Patrick, back to you again. Oh, Mr. Richard, welcome back. Mr. Patrick, to you, I wanted to find out how can fintech companies then educate users about data utilization? How do we proactively engage with these users and educate them about how their data is being used, and how are we transparent with them over the
I think number one should be clear and accessible privacy policy. Right? Write privacy policies in clear and simple language, avoiding legal jargon. If you come across applications, you download an application, and most of the time you see the long policies. Just scroll down to accept. Most of the time we don't need to get to read, understand. Everybody's guilty. Sometimes you just want to read, you want to scroll to the part you feel could be very, very detrimental, but you see yourself going to, after all, people have downloaded this application, man, I just have to just do accept and go. So if those things were just simple, like someone can just read it and understand before accepting, because sometimes we might not even understand the implication of what we're accepting until when there's a legal battle, maybe when there's a data breach, when someone has used your private information out there, then you now go back and say, wow, did I accept this? So if all those things could be a little clear, ensure privacy policies are easily accessible on your website and app as a fintech company, and highlight key points upfront before the other jargons that will follow. It should be very, very, very easy for users to go through. Then user-friendly consent mechanisms. You mentioned consent, right? When we implement straightforward consent mechanisms that informs users about data collection practices and obtain their explicit permission. These days, a lot of applications a lot of websites before you even go ahead, you see it pop up that this is how we collect your data, this is what we use your data to do. You accept or you don't accept. So it's actually important for fintech companies to put that in consideration and ensure that every application that are going there, they are turning out there gives or allow users to give their consent before they go ahead to collect data. Granular controls provide options for users to give consent for specific type of data usage, allowing them to control what information they share. When you allow them that granular control, people should be able to determine, okay, these are information I want to share. These are the ones I don't want to share. So because of that, I might go ahead using this application, or I might not go ahead using them. There are regular communication among these. Transparent communication regularly updates users about how the data is being used, especially if there are changes to your data practices. Use emails in-app notifications or blog posts to keep them informed of any changes in your data policies or data practices. Educate them, create and share content like articles, videos, and infographics that explain data privacy, and your company practices towards it. And I believe with few of these, we should be able to navigate around the concepts of I forgot interactive user support as well. Offer dedicated support channels to address user queries about data usage and privacy. Right? This could include chatbots, FAQs, and customer support hotline. Also, accept feedback, get feedback mechanism, implement feedback to gather usage opinions and concerns about data practices, and also use this feedback to improve transparency and user control. If you take care of some of these points, I think you will be home and dry. Thank you.
Thank you, Mr. Patrick. Four key points: clear policies and simple language, content management as well. The third one is regular communication. And I think the fourth one you mentioned that resonated with me is user support channels like chatbots. So, Chigozeram, I have a question for you concerning this. So, how would fintechs, or how do fintechs collaborate with media, right, to shape consumer perception and adoption around this data privacy? How fintechs and media come together to let people understand this data privacy and frameworks and stuff like that?
Okay, so just to get it clearly, are you asking about how it currently works, or some ways this could happen?
Okay, so how it currently works and some ways that this could happen, but why not, please?
All right, so I think I'll start with some ways it could happen, because there isn't like a lot of collaboration right now. I mean, if you're in Nigeria, you probably know that there's like a constant battle between startups and the media. But I think how it could work, one would be, it would be one. So one is this platform that we have right now. Webinars like this, events like this help to basically shed the light on what's going on in the industry. I mean, I've taken a few notes that I'd like to get into with the other speakers later on, but something like this helps, right? For example, some of the challenges around regulations. I think just Patrick who mentioned like tiered, or either Patrick or Malak, I can't remember, who mentioned like tiered compliance mechanisms, right? So it's something that could be used. Like learning about it now just is one way I could probably maybe delve into something like that with a regulator, for example. Sorry, pardon my ChatGPT. But yeah, I think one is we having events like this helps. Another would, I don't know if okay, this is more on the journalist part, and probably professionals can also do it. I think being willing to share your knowledge is very helpful. So you're the one on the field, you're the one who knows what the exact problems are, because sometimes a lot of these problems don't always come to the light until they've had a major impact, usually negative. We do not usually know that there are things going on. Like Malika mentioned earlier, for example, I may not know that your KYC processes are lax if I do not try to sign up on your platform, or maybe a customer flags it or something like that. So just sharing what you do is very helpful. And this is something that I've seen particularly with lending startups. They do not want to share what their credit scoring algorithms look like, or what their credit scoring requirements look like. And of course, maybe part of the reason is because you don't want to give out a lot of information to your competitors. But like sharing it with journalists it helps a whole lot because, like I mentioned earlier, if I do not understand what's going on, it's difficult for me to report accurately. And whether you like it or not, right, the media shapes perception. So using the media to your advantage helps. So we are looking at educating customers. Just a couple of weeks ago, the CBN had to stop certain fintechs from onboarding new customers, right? And I saw a few customers who were wondering why they had to verify their address. And it's funny to me because I know that when I opened my first bank account, I had to verify my address. But maybe someone who just opened an account with a fintech is not used to that. And when I saw it, I was like, yeah, this is like is regular stuff. You shouldn't really be complaining about this. But they were worried and they felt it was an invasion of their privacy, right? So if you had partnered with a media company, for example, to say, oh, this is what the CBN is asking for us, this is why they are asking for it. Without you providing us with this data, we cannot meet regulatory requirements, which means we cannot serve you. So just helping the public understand, because ultimately, when you partner with journalists to like do all of this, you're also helping to like make your customers trust you, because I don't know that any of us usually goes to our bank's social media to find out what they're doing. You probably find out through the media. You don't really go to their social media or even check your emails. If my bank sends me an email, I'm not really checking it, whether it's credit or I'm not really checking it, but I can read a newspaper or read an online blog to just know, okay, what's my bank trying to do around it? So that helps a whole lot. I think something else would be going out of your way to like create, and this is for the companies now, you don't necessarily need to partner with the media on this, but going out of your way to like create documents, create resources that help customers understand how you run your business. So a couple of months back, I needed to understand how, I think it was, I can't remember the particular sector, but I was trying to get something. And I just realized that a lot of European and American fintechs have like huge resource banks. Of course, a lot of them are B2B startups, but they have huge resource banks. Yeah, I remember now, it was something around card payments. And I could go and learn a lot about card payments from Stripe's website. But without naming names, you check our fintechs here, you rarely ever see such data banks on their websites. Paystack does a very good job of doing that. And even though it's lengthy, over 20 minutes, maybe spread across several days, I could learn quite a bit about what goes on in the industry. So the partnership is necessary, but I think maybe before we get to it, we probably need to walk around the misconception that industry professionals seem to have about the media. I usually hear tech media has, or we love negative stories, but I think that's really unfair and wrong, because nobody's going out to look for those negative stories. And if you pay any attention to like stories generally, or the media generally, you realize that you could publish a really positive story, it gets 1,000 clicks, and nobody retweets or nobody like speaks about it. Or publish one negative story and just sit back and watch what happens. Even the people who say you like negative stories go around getting screenshots, making comments on the negative story. So if you say we love negative stories, probably we are just feeding into what you like. Yeah, so I think we need to clear that misconception that the media is an enemy. The media is a tool, can be an effective tool to like get out word about it. And I don't know, not regulators yet, but yeah, the media can also be used to fight your battles with the regulator, right? I won't speak further on that.
Thank you, Chico, sir. I agree. I definitely agree. So I don't know if Mr. Richard is Mr. Richard is back with us. Mr. Richard, just let's track back a little bit. I think this will be our last conversation around data privacy, but just to get, hello?
Hi,
yeah. Okay, perfect. Just to get some overview, right? So what are some of the data privacy and security frameworks that are needed, right, to actually, protect and ensure consumer trust?
I think that a lot of that has been said on this webinar already, but missing for me is the role of the consumer, because the consumer has a responsibility to ensure that his or her data is protected, because it's your data, it's your decision to sign up, it's your decision to provide the information that the companies require when you were signing up, and then exposing or protecting your data emanates from there. So for me, the customer has that primary responsibility. And in any discussion of data protection, without the customer, we may not be able to achieve that foolproof data protection regime. So what are the levels of responsibility for the customer? So first is for you to ensure that the entity you are signing up with or providing your information to is, for instance, a regulated entity. The entity has framework to ensure that the data you are giving the entity will be used for the right purpose, will not be shared for the purpose other than you have provided the information to the entity. And the entity has systems in place to be able to ensure that issues of cyber attack, breaches, even if they occur, there are some limitations to the extent to which your data is exposed beyond the intended. So for me, we as individuals, we as end users must ensure that we are not, to say we are not reckless. We limit the extent to which we disclose and sign up, particularly on the internet. People sign up to all sorts of things, and they provide all sorts of information about themselves that even if you want to know where they were last night, all you have to do is to go onto the internet, and then you see a trace of where they've been. So our social media, our digital footprint, and the way and manner in which we provide information to entities must be carefully assessed, so that we to a large extent become our own watchdogs, because the best form of protection will only come from us as customers. Beyond that, the companies have the regulatory responsibility to ensure compliance with all sorts of regulations, either on data protection, AML, on IT infrastructure, PCIs, PC, SSD, and all that. And most largely, companies are making those investments because they recognize that that is the only way they can continue to operate. But those are technology, they are never foolproofed. So we as individuals also bear that responsibility to support any data protection agenda. That is the only way I see us having a win-win situation in terms of ensuring that everybody is safe and protected as far as our data is concerned.
Precisely, and I think I do agree. I think people forget that the consumers also, that there is some level of onus that falls on the consumer, because again, it is your data. Like you said, you choose to sign up, nobody forces you to sign up. So it's actually very important to know that the consumer does have, what's the word? Power. I think you can say power over. I do agree. We're slowly edging to the end of our webinar. We have one last segment to cover before we address our Q&As. And we have our closing remarks from our wonderful director. So the last question, I think this is for everybody and for anybody, for our panelists, of course. So basically, I wanted to find out now, so how does regulation, so Mr. Richard, since you're still on, right, I can start with you. How would you say regulations can promote financial inclusion?
I think to a large extent, because regulations determine what is permissible as far as financial innovation is concerned, regulation holds holds the door either open or closed for how new innovations that can drive financial inclusion can be designed and deployed. And I think that the regulators are becoming very proactive in recent times, because they recognize that innovation is miles ahead. And if you do not catch up or more or less be in tandem with innovation, there's going to be a time that innovation may force regulation out of the space and it will become chaotic. So what regulators are beginning to do, like the sandbox system that is being spoken about, we have similar initiative in Ghana, where the central bank has established an innovation sandbox for innovations that currently are unlicensed or do not have any license category, by innovations that can further the financial sector goals like financial inclusion, to be brought to their doorsteps and to be observed on a limited scale in terms of implementation. And then conversations are had about whether it should go under an existing regulatory framework or new regulatory framework is created to ensure its eventful commercial deployment. From that perspective, it shows clearly that regulations will play a major role in ensuring that innovators continue to innovate, innovators continue to design products that meet the objectives of regulation. And as much as possible, innovators are also solving consumer pain points, because the biggest issue of financial inclusion is to get solutions that customers will use. So if there are solutions that people are not going to use, or doesn't solve an emerging or existing customer pain point, then it becomes difficult for people to use them, onboard, and even participate in whatever the objective of that innovation is. So as much as possible, as long as we continue to have the financial sector as a regulated sector, yes, the policy objectives of regulations will influence what we design, but largely innovators will also play a key role in matching innovations that addresses consumer pain points and being able to drive their deployment in rural areas, particularly where there are a lot of people who are unbanked or underserved communities, because that is really where the issue of access as financial inclusion goals are. If people cannot access financial services, then they become excluded from the financial sector. So those innovations will be very key, but they will always operate within the regulatory space. And it's never going to be a time, I don't anticipate that anytime soon, that we're going to have innovations that are unregulated. Regulation is always going to dictate the pace. But we are beginning to see a lot of collaboration between regulators and innovators to ensure that we have seamless innovations being deployed across multiple financial service points.
Thank you, Mr. Richard. Lamosi, I think perfect if you go next. So you want me to repeat the question, or you got
it? Sorry, no, I think I got the question. I think it was around financial inclusion and how regulations can foster financial inclusion. Okay, so I mean, there's a simple answer and there's a more complex answer. The simple answer is, if you're asking how regulations can foster financial inclusion, you can say things like creating incentives for financial institutions and banks to reach low-income groups, to reach the unbanked, to reach rural areas. If you say you want to bring the unbanked like into the banks, you want to change them into the banks, then you need to make you need to create incentives so that people can actually do that. So I would say maybe, like, in the Startup Act, we have like tax incentives, tax breaks, they reduce fees for some of the startups for certain categories. That's something that you can do for financial institutions. You can say, okay, if you can get this amount of people banked by the end of the year, then you get maybe this tax break. Maybe next year when you are renewing your license, you won't have to pay the full fee, you pay half. Incentives like that, I think are practical measures to improve financial inclusion. There's also mobile banking. I'm not sure how, but if regulators can sort of find a way to push for mobile banking, like I always look at Kenya and M-Pesa as a good example. Even if you go to the most rural parts of Kenya, they still use USSD banking, M-Pesa. That's not the case in Nigeria. If you go to the more rural parts of Nigeria, you find hard cash. There's not a lot of USSD transactions. And I think that in a country that has, like, our low internet penetration rates, USSD is actually the future, if you ask me. Before we even get to the internet, USSD is the thing. Because in order for financial inclusion to improve, you need things like consumer education, and you need things like good internet penetration. That's the complex part of the answer, by the way. That's actually the answer. Because even if you want to be a fintech, let's say a fintech says, okay, I want to move into maybe the inner parts of eQuery or something and bring all the unbanked into the system. Do they have internet? Do they have light? Do they even understand how it works? So consumer education, the actual answer is consumer education and penetration. Everything else flows from those two. Everything else follows easily. Everything else can be done once those two things are achieved. That's my answer.
Yeah. Oh, yeah. That's. I definitely do agree. We have the same. I see Malika nodding her head as well. I wish I had a lot more time. I have questions. But anyways, let's continue. Malika, please, I would like to hear some of your thoughts on this. How can we?
Okay, so the reason why I was nodding my head in so aggressively was because I agree, like completely agree with everything she had mentioned. Particularly on USSD, because so it's really the key to how we can break open that conversation in terms of financial inclusion. I think a lot of times it goes over a lot of startup founders and the solutions that we build that especially if you're building for the African market, that a lot of the people you are trying to cater to.
We lose Malika?
Sorry, can you hear me?
No, we're back now. We're back now.
Okay.
We're back now.
So that a lot of the people that you are building solutions for may not readily have access to the facilities to make use of your product, like internet and these devices, smartphones and all of that. None of that goes really into consideration a lot of times. And so these groups get completely missed out. And I think for regulators to sort of support development and support that market, they need to play a very key role in factoring them into whatever regulation they are churning out. A lot of times they just go straight for the big hitters, what you're doing, and try to clamp down on certain processes and certain things. And so you see the need for convoluted KYC processes that in this group of individuals will never be able to provide. So there needs to be some sort of, let's say, lacks that allows for us to penetrate those markets, allows us to get to those markets, of course, within certain confines. So that needs to be something that is factored in, that how do we cater for these groups of individuals, people that don't necessarily have access to the technical fancy tools to provide biometrics on their mobile devices or extensive KYB information, or even to do address verification. Who are we going to send into this village to go and find out that this person lives here? So how do we really truly get to these markets? So I think that needs to be factored in. And education is very important. A lot of what we experience, or a lot of the gaps we notice, is that people don't actually understand what certain solutions are and what certain products will do and how it will improve their lives. I think that's a responsibility on those of us solution providers to also take up. This is our bit of our burden to bear as well. We churn out solutions to a certain group, we put out the information on social media platforms, and that's where we've limited it. A lot of marketing initiatives that I see now is limited to social media, digital marketing. There's no other down to earth groundwork that is being done, or low level marketing strategies that are being implemented these days to communicate the value proposition, or what this product will do and how this product will actually what's it called, harbor for financial inclusion. So I think there should be some focus there as well, and maybe regulators also play a hand in ensuring that it's easier to do these things, opening the floor for such initiatives as well, and for such actions to be carried out.
Thank you. Sorry, I lost you for a bit, but I'm being kept updated by another device. So before we go to, I'm sorry, I apologize. Before we get to, I see Lamosi has her hands up. Please feel free to interrupt me. Go ahead.
Yeah, no, I just wanted to add something very quickly to what Malaika said, because as she was speaking, my wheels were just turning. And something I wanted to mention while I was speaking was agent banking, because I also saw that we had like a comment on that. If we're looking for an easy way, I mean, easy being relative, of course. If we're looking for an easy way to like reach the unbanked, to educate them, especially in Nigeria today, what I'm seeing is that somebody will actually have to do the legwork. It's not going to be via social media. It's not going to be via all the fancy marketing platforms. Somebody has to actually go in person. Like, we need people who can penetrate these rural areas, explain products and services to them, and then explain how they work. So, and that would also help, I think, with addressing some KYC concerns, because you can verify in person if someone is who they say they are. There's NIN now. It's just a matter of getting someone's NIN slip, checking it on the database, confirming that the name and the face on the database match the person that you're seeing in front of you, before maybe enabling them like with the USSD with USSD functionality, basically. So I think that that's another way, another method we could use that we're not really maybe utilizing. Just wanted to add that in very quickly. That's all.
Thank you. I agree with that as well. Mr. Patrick, over to you now. So how do we? I don't know if you got the question, or if you'd like me to repeat.
Yeah, please repeat.
I should repeat?
Yes.
Okay, so the question is, how can some of these regulations, right? How can regulations promote financial inclusion?
Okay. There are several ways I think regulations can promote financial inclusion. First of all, regulations create trust. One of the reasons why consumers are not patronizing digital payment or digital platforms, or even some small financial institutions, is because of lack of trust. The other day, we saw a bank go down, and the highest you could get is 5 million naira. There are smaller banks out there that are finding it difficult to get customers. Now, with regulation, consumers could they can have that comfort that, okay, at least if I drop 2 million here, even if anything happens, NDIC will pay me back. This is how regulation has come to bring trust, that someone can probably go and patronize a bank, right? Oftentimes we see regulation to be on the negative side. As fintech people, will see regulations to be only the protection, or only a tool to protect the consumers, while it is against us. But sometimes regulation helps fintechs to even come out and expand. Regulations promote collaborations. Regulation promotes collaboration, in the sense that when, example, CBN brings out a regulation, right, for an early fintech that could have just come out and turn out a product just to test that product, and at the end of the day, it could fail. People will lose money. But because of regulation, they were like, okay, how do I navigate this regulation? You will see a small financial institution partnering with a bigger financial institution, because that bigger financial institution is well established and has extensive experience with regulatory compliance. Their guidance can help fintech startups navigate complex regulatory landscape more efficiently. In doing that, you see that you have established a partnership with this bigger financial institution, which also brings market credibility and trust. Partnering with a reputable financial institution can enhance a fintech startup credibility and trustworthiness in the market, attracting more customers and investors that he could have just that he could get ordinarily without such collaboration. So regulation help a lot. The utmost among all the things regulation brings is trust. If people can trust whatever you are doing, they'll be able to patronize you. And regulation also supports for digital financial services, which also promotes financial inclusion. Positive regulations that could help digital, of course, we saw how money point came and ramp up everywhere. If there were no regulations that guides what money point does, probably they would have been able to get even customers to trust whatever they're doing. So there are positive side of regulation, and regulation helps a lot. Even on the fintech aspect, as I mentioned earlier, regulation helps for expansion, right? Financial institutions that have large and established customer base can the smaller ones can gain access to these customers, significantly expanding their reach and market penetration, thereby promoting financial inclusion. A lot of innovations are coming out there, but with these regulations, people can partner with the established, not just established financial institutions, but also established fintech companies as well that have been there. Just because you are not able to go around this regulation, we are able to say, okay, look at what these guys are doing. We can partner, look at these guys, they already have the customer base we are looking out for. Okay, if we can partner with them, we'll be able to get around this regulation and also be able to tap into their customer base and able to expand our market reach to teaming people that need it. And that's how I think regulation can actually help our financial institution and also help financial inclusion. Thank you.
Very insightful, Patrick. Thank you. Chikaziram, for the same question, but I would like to adjust it a little bit, right? So my question for you is, so how can industry voices, for example, the people we have in this as our panelists, right? How can they influence or what role do they play in helping drive this financial inclusion goal that we're all trying to?
Okay, so that is a difficult question. Well, I'll just add to like the responses that the other panelists gave earlier. So regulations create an enabling environment for any kind of innovation. And for financial inclusion, it also helps a whole lot. So one is creating incentives to take certain actions by players. So Malaka mentioned earlier that we need to so that a lot of the advertising that is done currently is like digital marketing. But the market woman probably doesn't spend a lot of time on Facebook. So she would not see your marketing, or maybe she would not see your customer education efforts, right? So how do you get out of this box and then go meet her where she is? The problem is it's expensive for you to use it's expensive to use outlets that are not digital, and it's also difficult to track performance. So billboards are super expensive. Going from house to house to do that is also expensive. And even if we are talking about agent networks, you need a lot of money to roll out agent networks. So a small fintech may not be really interested in cracking that market when they consider all the costs that would go into it. So regulations can help to create incentives for them. Can you de-risk these efforts? Can you make it easier? We talked earlier about how the high cost of getting licenses can discourage people. I don't know too many young people who have 200 million lying around. If I have to get 200 million to provide a service to people, I'm most likely going to abandon it and just figure out how to do e-commerce, right? So if we can make it easier for people to get involved, they could also provide services that drive financial inclusion. I mean, how do you make someone leave Lagos and get into the north to offer financial services to women who have never opened a bank account in their lives? It costs a lot of money to do that. But if a lot of my money is going to be tied up in licenses, then what money do I have to drive this initiative? So I think regulation can play a huge role in that. And also educating customers, like others mentioned earlier. If the CBN takes up the cost of educating customers, then I think a lot of fintechs would have less challenges. And I'm talking about things like educating them about trust. I've seen a few startups trying to make people trust them more by like saying, oh, look, we are as trustworthy as a bank, right? If anything happens to us, you still get the same amount of money that your bank would give you. And the truth is, it's expensive for them to do all of that, right? So I'll give an example that isn't really fintech related. Look at the e-commerce space, right? Chowder can succeed today because Jumia worked so they could run. But Jumia did not have to spend a lot of money changing people's perception. What if they had an iPost helping on that end, right? How can the CBN, how can SEC, how can NIDS, for example, make it easier that you know that these fintechs are equally trustworthy? Because a lot of people are worried about the safety of their funds. Sometimes I ask market women who use fintechs to receive money, do you leave your money here? And they're like, no, why would I do that? They don't know what they can do. And now, as a result, fintechs are having to open up offices, hire a lot of people just so that there's some visibility around that. I mean, if you open up an office in Lagos, that's already expensive. You probably could have spent that money on some marketing efforts. So can the regulator help to do that? I think they can. Can you create tax incentives, for example? The Startup Act was supposed to create a tax break for certain startups, but we are now seeing a year after, there has been no move on that end. If you created tax breaks for certain startups, the money they save on taxes could go into other parts of their operation. So how can we move such conversation forward? And a very good example of how regulation, even bad regulation, can like advance certain strategies or certain goals is what happened last year with the cash, the changing of the Naira notes, right? OPay, MoneyPoint, and PalmPay. I'm not sure they were expecting that people would suddenly move to cash before those regulations came. But all of a sudden, you had no other option. If you wanted to do business and I didn't have cash, what were you going to do? You couldn't do any other thing, so you had to go online. So this is one example of bad regulation pushing an agenda, right? Or poorly executed regulation, rather, pushing an agenda that the regulator had. So regulations are very, very important. I think something else would be, okay, I've talked about reducing the barrier to entry. So yeah, but to answer your questions, how can industry voices help as influence? One would be interfacing with regulators, right? So regulators are not always they're not always educated about the industries that they are regulating. Can we see moves from the industry into the regulator? It's difficult. It's difficult to do that because you're just one person. But can we see coordinated efforts to, like, the way you do events with your customers, where you're trying to explain your customer, your value proposition to them, trying to build trust? Can we hold town halls with regulators and say, oh, look, this is what we do, and this is how we would like to work with you? Get proactive with regulation. That's also expensive, so a lot of people may decide not to do that. But can we have the industry getting proactive? Can we have some more collaboration on regulations? We've seen a few attempts to perhaps like create a fraud blacklist, for example. But could we create something like that for engaging with the regulator? Because if one startup goes with, if they just go alone to go interface with the CBN, for example, they probably are going to get turned away. But when you know that there's this group of people that represents the entire, I mean, I hate to use this example, but look at the Labour NLC and how they are able to hold the entire country to ransom. I'm not saying you go hold the CBN to ransom because plenty is to take, but can we have this coordinated effort where operators in this ecosystem who are directly affected by regulation say, oh, look, can we have quarterly meetups where we explain what's going on in the industry? Of course, the regulator has to also get proactive and go find out what's happening, especially with the sandboxes that are being brought up, because something that maybe makes people not do all of this collaboration is thinking that you would not be affected. But as Nigerians usually say, it's only a matter of time before the hand will meet you. So can we get proactive with things like this? And yeah, like I mentioned earlier, like just use the media as well. I don't know if this part of my last response made it to you guys, but I said the media can be both a tool for education and a tool for you fighting with the regulator, or for you to get your word across to the regulator, because the regulators also read they read TechPoint, they read Vanguard, they read every other media platform, in case you don't know, because that's really how they find out about you and about your activities. So can you engage with the media more frequently in order to get your agenda out? So I think these few points of mine should communicate what I'm trying to say.
Thank you, Juky. Very, very, very insightful. So, fortunately, unfortunately, we have come to the end of our segment. Thank you very much, our esteemed panelists. It's very insightful, very, very intelligent conversation we had. So before we round up, we have a couple of Q&As on the chat. So I'll take maybe 2 or 3 because I think a couple of the questions have been answered if you were paying attention, which I want to believe you are. But I think there's one that is pretty simple. And I think the questions I'm throwing it anyway, I think we just require one answer, and then we can move on. So the question is, I am curious, sharing consumer data with third parties, is it legal? So I think maybe if Ilamosi is still with us, maybe she could take that. She could take that question. Just something short, a simple answer, or anybody that wants to ask that question. I can repeat the question again. I'm curious, sharing consumer data with third parties, is this legal? Anybody to answer? Yes or no? Okay. I think we have a bunch of the questions answered here. We have a question that talks about discussing the importance of fostering the culture of compliance with financial institutions and how this can be achieved. I think Chigozie touched on that. I think our panelists had touched on that as well. And also, are there international models or regulatory frameworks that Nigeria can adopt for fintech growth? I think Ilamosi had also touched on that as well. So I think, yeah, I think a very, very insightful conversation being had here. At this point, I would like to invite our director for operations to please share some remarks and express our appreciation. Over to you, director.
I don't know if anybody responded to the question on sharing consumer data with third party.
Please, if you have an answer. Is it legal? Is it not legal?
I think the legality of sharing consumer data with third party depends on several factors.
Okay.
One, it will depend on the jurisdiction where you are and where your consumer is. 2, it will have obtained consent from the consumer whether to share this data or not to share this data. And also, it's also dependent on the data protection law of the jurisdiction you are coming from. So you need to put all these things in perspective. You need to consider where you are coming from, where the data is being shared, the data protection law, then the consumers you are sharing their data. If they have your consent to share their data, I think you can share. Then data security as well. If you trust the third party, if it's not, if the reason why you are sharing the data is not selfish, if it's for the benefit of the consumer and you've obtained consent from the consumer, I think you can share. If the data you are sharing is to enhance the product that you are delivering to the consumer, and you've obtained consent from the consumer. You remember, one thing that comes across everything I'm saying is consent. You need consent of a data owner before you can share it, no matter what. Even if you are trying to enhance a product for the benefit of that consumer, it doesn't necessarily mean that you will not get consent. You must get consent either way. You must get consent from the consumer before you're able to share it. So you put all this in consideration before you share.
Thank you very much. So I think Uzoma, I think Mr. Patrick has answered your question. So over to you, our director.
Thank you very much, Michael. Thank you, everyone, also for joining us. So first of all, I would like to introduce myself. My name is Mohammed Maibe. I'm the Director for Operations here at QoreID. I would like to, first of all, thank the audience for joining us today. Thank you for giving us your time. I know we went over slightly, but thank you for engaging with the topic. Next, I would like to thank our esteemed panelists for sharing their expertise with us. I think I learned a great deal during this session. I'm sure the audience also learned a great deal. We would like to keep this conversation going with everyone in the audience. If you want to engage with QoreID to learn more about our services and how they can sort of potentially impact your onboarding, streamline your compliance processes, you can reach out to us through our website, which I think Amaka mentioned earlier, www.QoreID.com, or you can send us an email at sales@QoreID.com. So we'll be able to take you through our products. You can set up a demo. We can show you how we're able to support basically KYC and profiling for a variety of different channels. I know that a lot of focus was made on USSD towards the end of this. We can show you how we can potentially support that as well. So please reach out to us, set up a demo, learn more about our products and services, and we'll love to sort of have you as one of our customers. Thank you very much again also to Michael for moderating this wonderful session. I'll just sign off here now and send it back to you. Thanks.
All right. Thank you. Thank you, my director. Thank you, everybody. Thank you, everybody, once again for joining us